Good morning. It is Wednesday, July 23rd. I'm Zach Howard, and here is your morning market report. We'll be looking at the day to start this glorious Wednesday. Love Wednesday, especially when it's sunny. U.S. M2 money supply out yesterday, passing that $22 trillion fiat nominal number. Rate of change, that's what matters. It's up almost $1 trillion year over year. We are in a debt-based economy with constant credit creation is required to keep this money monster moving. Without that, we slow to a crawl. We had to continue to stimulate via debt creation. So this is now into the acceleration phase of where money supply grows. Significant reversal for where it was 2 years ago. And we're just getting to the juicy part, as I mentioned. The money supply works on a lag as it affects growth in asset prices and thus inflation. 14 consecutive months now of M2 growth. Key observation from this trend: steady growth, shift in growing economy, true stimulus, true AI advancements, true all the tools necessary to keep the economy running hot. Run it hot fiscally, monetarily, equals higher asset prices. That is the recipe for continued growth. We can't do austerity with the debt, so we need to try to grow with stimulus, true growth. That is what the plan is. They're saying the quiet part out loud, which equals debasement. Like I say, 12, 18-month lag, we're going to get real world inflation start showing up along with that asset inflation. But it really boxes in if they want to keep to their whole Fed policy standpoint of worrying about inflation, yada, yada. Really, it's a shadow Fed at this point. The Trump administration and the Fed are joined at the hip. Powell is just a talking mouthpiece that will eventually be removed. And someone who wants to replace his job is going to have to get in line with whatever the Trump administration is saying. Lower the rates, lower the short-term side of the Fed funds. They can't do anything about the long-term rates, which the market does, unless they buy the bonds, which eventually they will do as well, like Japan. So we have gold near all-time highs. We have silver near all-time highs. We have copper at all-time highs. Bitcoin at all-time highs. Stocks at all-time highs. The question is gold, silver, copper, stocks, Bitcoin all going higher? Or is it the fiat that is going lower? That is the question you need to ask yourself. A combination of the both. But not every fiat currency is created equally in terms of its debasement characteristics. Some countries experience summer in different seasons. As we see in Japan, they've already undergone this acceleration in their debasement over the last 5 years. That's why hard money, hard assets, gold, Bitcoin, etc., has accelerated higher in Japanese yen terms than US dollar terms up to this point. 8% on average annually over the last 5 years. Does US take the lead now in that race with the acceleration from Japan and other currencies like the CAD in Canada, the UK pound, the euro eventually? It's our race to the end, which is a loss of purchasing power in real terms when you have these wealth compensation instruments, government bonds. That is what fiat money is, okay? It is in the view of government bonds. As yields rise because there's less demand, the value of those bonds fall. And all these countries are in the same playbook. It's just some have different varieties of melting ice cubes at this point. Back to the melt up in equities as a result of all this. It's been a trader's paradise here for the summer and ever since the beginning of 2025, especially if you got the tweets ahead of time from the President Trump and Pumper. You could get out in front and put on some positions that were very temporarily. If you bought the dip in those down days in the NASDAQ, the QQQ, NASDAQ 100, and just held them for the following day, you're up 29% on the year. That only matches 2 other previous highs and that kind of a strategy. In 2020, we had craziness, and back during the .com 2020 when People were trading in coffee shops. We are still in this environment of buy the dip, and I talk about it. The flows and the macro regime and the low volatility. I'll support that. On to my favorite company to watch. It is the most interesting company, arguably over the last 100 years, because it has one of the most interesting characters at it. The stock is the actual company, not the cars they make or any other products, if you ask me. So they do report earnings after the bell today. That mega cap Tesla car company. What is the trend? The trend is it's not really a growing growth company anymore, as a narrative by Wall Street analysts who are supported to keep the stock story going because they want the underwriting, investment, banking business, and all that comes with it. The company is not really growing, but that doesn't matter. Back to the previous slides about a volatility regime that we are in and a creation of fiat money through the money supply. That is the backdrop for higher Tesla stock price regardless. It's not a fundamental Benjamin Graham analysis that affects this company, which is the ultimate meme company, meme coin, if you ask me. Analysts project revenue to slide again down 13% year over year. So much for that growth story. The earnings per share will be down again. Arguably, their earnings per share the strongest part of the business is going to come from their Bitcoin holdings here in this quarter. But the thing that really stands out that call BS on Mr. Musk and all his fancy plans about AI robots and full self-driving, we're going to Mars, is the company really doesn't spend on research and development like these other mega cap tech companies. When you look in comparison to its percentage of sales, percentage of revenue in the lens of Microsoft, Meta, and Google, which are the leaders in AI and technology and where the puck is going, it's still a manufacturing company, a capital-intensive manufacturing company with low margins. It's a shitty business, especially in the world of where we're going with technology. So call BS on whatever Musk is going to say on the earnings call like he usually does. It's not a matter of that. It's a matter of the low volatility environment the market is in. It's not really going to punish Tesla at this point. When the volatility regime is rising, we're in a VIX environment above 22, 25. It's one of the best shorts in the market. When you get the VIX down below 17, 16, 15, it's the ultimate fart coin type trade. And it moves off that and flows more than anything else. The company should have just bought more Bitcoin. It would have been a lot easier than all the smoke and mirror promises like Mr. Saylor at Strategy, which is sitting on potentially here for its Q2 earnings, the 8th biggest quarterly earnings in U.S. company history. Ouch, $14.05 billion on its fair value of its Bitcoin holdings. So less than to Elon. Should have just bought more Bitcoin, dude, and call it a day instead of all this theater that you keep getting on with. That's what I got for you today. I hope you have a great day. See you tomorrow.